Redfin just reported that right now there's 500,000 more sellers than there are buyers. So people are wondering why prices have not crashed like in 2008.
I know there's an imbalance right now. That's for sure. Like, before it was such, we just got out of this seller's market, right? Like everybody has this mindset. There should be all these cars that show up when something gets listed, like the old days, right? Those days are gone.
Yeah. For sure.
I mean, so what's interesting to me is days on market is longer. People are getting frustrated. They're finally doing some discounts. And we're actually just moving back to the mean. I think you and I were talking about this. This is more of a market shift. This is not a collapse. Repeat. This is not a collapse. This is a market shift. And we're just going back to what's normal, right? Like, you remember what it was like when you were buying stuff?
Yeah. I mean, you actually had time to buy. I mean, you would go look and I'd go look at something and then I could take a week and think about it and then, strategize and then come up with an offer. I mean, this stuff where everything was flying off the shelves, I mean, that's unheard of. And, I think a lot of buyers are freaking out. Oh, this house has been sitting for 27 days and must be something wrong with it. It's like things aren't supposed to sell in 2 days, and sellers are doing it too. I'm watching them, they're discounting prices after only a few days on the market as well. So it's, both, right? So, I do think it's a little interesting that the market's just slowing down.
It's actually, is it? Or is it just going back to normal? I think now, you remember, like, as we bought our house, let's call it a year ago. And I go, we better go see this today. Remember?
Yeah.
It came on. We're like, the guy put the price. He actually lowered the price. I go, we need to go see this today.
Right.
And you're like, because we were leaving. And I go, this might not be here when we get back.
Right, in a week or whatever.
And thank God we did, because we cut a deal with the guy. We put it into escrow. Then we went on a cruise. But the reality is had we not, that house would have been gone.
But I do think it's significant because right now, people are going to see more inventory stack up because there's such an imbalance, right? Yeah. So I don't think there'll be significant amounts of inventory because, as we talk on the show, a lot of people are in these really low priced mortgages. But I do think that you are going to see inventory continue to rise. So you will see the discounts coming if people need to sell. And that's the big thing. Do they need to sell? Because there's a lot of people. I mean, I even know people that have their house on the market, but they don't have to sell it. They're just...
That's because they have a lot of equity, right? Yeah. That's the interesting thing this time around. I actually like that. I think it's awesome that people have stuff listed that have a lot of equity because, there's no pressure for the seller. Obviously they have, like all sellers, they're looking in their rear view mirror and the buyers are looking out the windshield, right? Like, they're like, that's the big difference.
But I do think what's interesting with these sellers is, unless they have to sell, they can't afford to discount it too much because then they're going to have to then buy, right? Unless they're, going through retirement. But if you think of like a family that's in a 4% mortgage and maybe they want to just upgrade one more bedroom and they're okay going from, 4% to 7% and paying a little more, they still need to get premium dollar for the house they're selling, right? Like, it still matters because they're rolling that over into a buy. The people that can afford to discount more are like your seniors that are downsizing because they're still making money. They're going to buy something cheaper. Their house is probably paid off or close to it. So they can kind of afford to discount. And then obviously you have people that have to sell, like going through a divorce or something, that will discount. But a lot of these people, they're not going to just discount their house because they just have to sell it to have to buy something else. I mean, that's not really realistic.
I know, but we are in a situation right now per Redfin, there's 500,000 more sellers than buyers.
Yes.
Okay. That was not the case. Not very long ago.
Nope. It was vice versa,
really. Right. So what we have is a supply and demand problem, right? We have a lot more people that are trying to sell that are trying to buy. So if you're in the buying side, you've got a pretty good situation right now where you can wait. You have lots of inventory. You can negotiate. That everything's negotiable right now, right? And you just had a deal go in escrow this last week.
Yeah. I did. We just had a deal go into escrow. And, I'm watching a lot of inventory for some of my clients that are looking. And when we go see a house that I like, even if they don't like it, I like to follow it and see if they had to discount just so I get a grip on the market. And houses are still moving. They're just taking 50 some days to move. So, when your buyer thinks it's never going to sell for that price, it is if it just sits long enough.
You want to protect what you've built? Join my free live session to see what's really happening in this market. No guessing, real data, just real deals. Just follow the QR code on the screen or click the link below to register. Well, I know that one neighborhood you were looking at, there was 5 or 6 of those types of houses. Danille's got this little sneaky neighborhood, so we won't mention which one. But there was like 5 or 6 houses. They're all 2-bedroom, 2-bath, 2-car garage with a yard. Really small, like 1,800 foot, but really affordable, nice, really, really nice, and sneaky little spot. And now there's only one.
There's only one, right? And so, yeah, so things are moving. I mean, people think things aren't moving. What I'm seeing is things are overpriced, and they're not moving because they're overpriced. And they may have even been priced correctly last year, but prices have went down a little bit. Not a lot, but they went down a little bit. And so, I'm seeing that too, right? But what I thought was interesting, if you look at months of supply, because that's really what you look at when you see if it's a balanced market or not. Right now, nationally, now obviously you talk about you got to break this down more regionally because there's places like Austin that have a lot of supply, and there's places in the
Orlando,
East Coast that don't have much supply at all. So, but right now nationally we have a 4.8 month supply, which is a very balanced market. I mean that like almost 5 months of supply. That's a good market. But if you look at the new builds, and I think that this is interesting, you have an 8.1 month of supply, which is a very builder heavy inventory. So on new builds, you might see a lot of concessions, not necessarily price cuts, because the way new builds do it, they don't like to hurt their sales price, but they're offering a lot of concessions. And they're doing that because there's so much supply, and these are people that have to sell. And that's the difference between existing homes and new homes, is all the new builds have to be sold. They cannot sit on them, unlike the existing builds.
Yeah, and one of the things that you might want to take a look at is Lennar Homes just put their report out. So they're a public company, and so what's cool about public companies is they report their earnings and they report how they've done. And it showed that there was almost a 30% price decline with the Lennar Homes. Mm-hmm. As it shoved most of that they call it marketing costs, but they were really rate buy downs inside of their net. So these were net earnings per home. And it was almost, might even just been a little over 30%. Just Google it, you'll see. It's a very interesting statistic. And these are all brand new homes, brand new builds. And I think, obviously, as you guys know, a brand new home typically is at the top of a market, mm-hmm. right? They're brand new. And so they're having a tough time because the price is typically higher than, like an existing one. And then they're really trying to get the interest rates of the neighborhood next door to them, right? Which might be existing inventory. So they've been buying down these rates. And but that 8.1 months of new supply is not a favorable number if you're in the home building business.
No.
That's a lot of inventory.
Yeah, it is. And that's nationally. So I'm sure there's still places where new builds are doing fine, and there's places where they're not.
But I just want to, before we move off of this, I just want people to understand 4.8 for existing homes of balance. It's a balanced market. 8.1, it's a builder heavy. And the difference, of course, is 3.5 points, 3.5 months. So that is a lot of houses. Mm-hmm. It doesn't sound like much, guys. 4.8 months versus 8.1. It doesn't sound like a lot. But 3.5 months of housing in the U.S., that's a lot for the builders, on the new build side. That's a lot of houses.
And just to break it down, in 2008, we were seeing 10 to 12 months of supply right before the crash. That's how much it had built up.
Right. So new builds are at 8 and existing are at half that. So if that doubles, that's when 2008 crashed.
But I do think 2008 was different in the way that, a lot of people had adjustable rate mortgages. So those people literally had to sell. I mean, if your interest rate like doubled overnight, you would need to sell. You couldn't afford that mortgage. Even if the inventory keeps going up, people don't have to sell.
Yeah,
like,
this different. This is definitely different.
Because it's going to keep going up because we have, 500,000 more sellers right now than buyers. One could argue you're not going to get much more buyers right now unless the Fed starts to drop rates. So you are going to have a buildup of inventory. But the real question is, how many of those people have to sell? Because if they don't have to sell, they're not going to sell. Like I've been looking at the MLS a lot, and what we're seeing, some homes aren't selling and they're sitting there and they're getting delisted. It's not like people are just dropping the price like crazy to sell. You see that a little on Airbnbs and things like that, but it's overall, I just think that even if inventory goes way up, if people don't have to sell, because here's the thing, is a lot of these people that have homes for sale that I'm seeing are buying something else, right?
Yeah.
So they're not going to buy something, like discount their home significantly then to go buy something else. Like that doesn't make at a higher interest rate. That makes zero sense. So you're assuming that these people cannot afford this home. Like that's what you're assuming. You're assuming all these people are going to have to sell because they can't afford to keep their home they're staying in. So they're going to sell it and they're going to drop the price. And we're not really seeing that right now. Right now, it looks like most sellers are selling out of convenience than selling out of necessity.
Well, that's what you and I are in right now.
Yeah.
We bought a new house last year. And I waited, so I don't know if that was a good idea or not, but I did. And I listed it, 60 days ago?
Mm-hmm.
Yeah. And we bought a house first. We didn't want to be rushed on the move. So we own 2 houses. And we listed, we don't owe anything on the other one, but we listed that and we're waiting. Mm-hmm. And I have no debt on it. So it's just listed.
Yeah.
See, if it gets sold, there's a lot of people with a fair amount of equity sitting in homes that are listed.
Yeah, and I would even say that we're not even the average because we have 2 homes right now. Like I say, most people, they're going to wait to buy until they sell, especially in this market. Like some people, unfortunately, got caught in the in-between when things were still selling relatively quickly and they bought and they didn't realize the market was changing and now they have a vacant home.
Yeah.
And those people are more, more motivated to sell because they are paying for 2. But I think a lot of people now, they're reading the room and they're like, well, we're not going to buy until we sell. And if we don't sell, then we're not going to buy. So, it's just one of those things where it'll be, you have to remember in 2008, because of the adjustable rate mortgages, most of that 10 to 12% of inventory needed to sell, just like the builders need to sell. But right now, with these low interest rates, I don't think there's that many people that have to sell.
Yeah, I would agree. And the other thing is that things are different on the alternatives that they used to have. So Airbnb is a little bit under attack right now, right? By the cities, by the HOAs, even by the neighborhoods. Like I saw a photo the other day where somebody listed a house and all the neighbors put up those little bandit signs that says, we don't want Airbnbs. We don't want Airbnbs across the street, next door. And so,
lovely neighbors.
The lovely neighbors. But regardless, people don't necessarily want an Airbnb next to them. So there's some pushback. However, Airbnb has grown, the company, in the number of listings. So that's been interesting. But the price per night is definitely in flux because of the amount of listings. And so I think that's peaked probably and maybe flatline and maybe even coming down a little bit. The other one, however, is the actual rentals. Those are also lots and lots and lots and lots of choices right now. So they don't really have that as an option like they used to.
Yeah, absolutely. And there's things that could make the prices drop further. And I think it's important to touch on those things. If we have large scale unemployment with no additional, stimulus money, that could drop.
I sure hope that doesn't happen.
Housing prices.
Well, the one thing is that, as you pointed out, is the one category that has to sell, builders.
Yeah.
Right? Mm-hmm. They have to sell. And there's a lot of people that have moved. I find it interesting on who actually is listing their house right now, right?
Mm-hmm.
Divorce probably.
Yeah.
Relocation, some kind of job. But if you have a low mortgage, you'd be crazy to get out of it. I talked to so many people that are sitting in below 3%.
Yeah.
And they're like, I can't afford to move right now because I'd lose out. I'd be $2,000-$3,000 more a month
Right.
going somewhere else.
Well, I was talking to my friend in Ohio, and she was like, yeah, I always wanted to move, but we've just decided we're probably living in this house forever, so we're going to remodel. And I think that's what a lot of people are doing. They're remodeling because, like she said, their interest rate's so low. They bought at a good time before 2020, and like, how are they going to sell and upgrade a house? Like, they can't.
That's the thing, unless they really crush it and they're able to, which of course they could do. But that's kind of the point.
But even, yeah, exactly. But I mean, just financially, it just doesn't make sense for your average family.
No, just stay put. And what's interesting, the last time we were in a stay put economy, to your point, guess what crushed it? Ace Hardware, Lowe's, Home Depot, like Handyman, like that kind of stuff. Because people are like, our kitchen's getting tired. Yep. Like, I want new this, new that. So that could be, if these rates stay high, a huge wave, like we just experienced.
Yeah, absolutely. And, something interesting is, I show a lot of houses, right? In the last couple of months, what I've noticed is the houses I'm showing were initially predominantly vacant. Probably 4 months ago, let's say. So most houses were vacant. Occasionally someone would be there and we'd have to schedule around them. Now, more and more houses have people in them. So there's less vacant homes that I'm showing as an agent. And that's important because, as I said before, people are realizing I don't want to buy and then sell. I need to sell and then buy.
Yeah. And so that's definitely true. And I think that's a direct reflection on the fact that there's so many more sellers than there are buyers.
Absolutely. Right? And I think people are starting to understand that. Before everyone was like, you could fog a mirror and sell your house. Yeah, it got too easy to buy and sell houses, and now it's harder. I mean, you really have to do your due diligence as a buyer. You have to really price your house right as a seller, and you need that good, advice.
That's good. I actually think this is a good time because there always should be a little bit of resistance on the sales side and the buyer side. In other words, I think buyers feel better when they have, when they feel like they've got some kind of a deal, right?
Totally.
And
they can think before they buy.
Correct, right? They have time. Whereas I think the sellers have been in the driver's seat for so long, and it's just shifting back. It's not anywhere near where it was. But it is kind of nice to not have to feel rushed to go through a process, to be able to have lots of options as a buyer, even though the sellers probably hate it. And also there's all kinds of things up for negotiation at this point, right? If you're selling something.
Totally.
Right? Yeah,
if you're selling something, you should expect negotiation.
Right.
Like, nobody's getting full asking price. And if you're seeing they're getting it, on Zillow or whatever you look at, what you can't see that I can see on the back end is the concessions that are offered. So even if a house is selling for the quote unquote listing price, the seller might have given, 3% concession or whatever it is on the back end. It doesn't show on Zillow.
There's all kinds of stuff that goes on, guys, to try to keep the price as the sold price higher. But even without all that, you're seeing 10 to 20% discounts on some houses, right?
That's kind of aggressive, but I am seeing some discounts. I would say, I'm seeing a lot of concessions, right? And I'm seeing a lot of price drops, but typically the price drops for the most part are on houses that are overpriced to begin with. But I definitely am seeing concessions, sometimes 3, 4, 5% on the sale price on the back end once it closes.
I had a funny conversation with our neighbor, and he's a car guy. And he's like, I don't know about that house next door to me, because remember the one next door to him went up. Actually, it sold, and then for whatever reason, they never really moved in. I guess they did for a little while, and then they relisted
Very
it.
specific.
Anyway, but it hasn't sold. And he's like, I think they've listed it for too little. And I said, well, you're a car guy. Like, if that's the case, then wouldn't it be sold? You know what I mean? So I guess because, again, no matter what you think, the market decides.
The market does decide. And now is not the time, if you're a seller, to overprice your house when you list it, because it is true that those first 30 days, people buyers put their parameters in on Zillow and your stuff stops popping up after about a month. So you don't want to overprice right now because it's going to, hurt you later. But you also don't want to just give your house away because things still are selling when the right buyer comes along. But I do think, though, that with buyers, you have to know that you can negotiate right now, and it's a great time to buy, and it's not a terrible time to buy like you listen to every YouTube video because as soon as the environment and the rates change, and they eventually will, I mean, nobody has a crystal ball to know when, and you get more buyers coming out of the woodwork, then you're going to be back to, the sellers are going to have more power than they have right now.
Yeah, let's switch over to mortgage rates and mortgage delinquencies because I think a lot of people focus here, right? Because everybody asks me the question, is this 2008? Is this 2008? I'm like, if you're asking me that, you've clearly never been through it, right? Like,
right.
It's not even close.
I think why people think that, well, one, you have a bunch of like YouTube people trying to get clicks. So that's A. But B is because, people are starting to see inventory stack up. There's not a lot of buyers. They're kind of seeing everything that you quote unquote had started to see before 2008. And people think history repeats itself, but they're just not understanding the fundamentals of what caused 2008, and the fundamentals are what's happening right now.
I think fundamentals are one thing, but in 2008 to 10, was there 10 million foreclosures? Let me just repeat that. 10 million foreclosures. Okay. So for those of you who are asking, is this 2008? The answer is hell no. Like not even close.
Yeah.
And back then, people didn't have equity. They didn't have equity. They were they called it jingle mail. They were throwing their keys back to the banks and walking away because the homes were worth less than the loan. That was huge because guess who's writing that down? The banks. And all these people were in foreclosure, and there's this huge shift of people over to the rental market. This is extremely different. What we've got now is mortgage delinquencies are less than 1%.
Yeah, they're less than 1%. And I think what's important to note about 2008 as well is they had adjustable mortgages. So, they were at they had one housing payment that then significantly ballooned. They were balloon loans
that's a good point.
To another housing payment. So, say your housing payment's $1,500, you're fine. And all of a sudden it balloons to $2,700 and now you can't afford it. That's a little different than having the same exact mortgage payment month to month to month that you had when you signed up for the loan. Also, people were walking away from loans because they didn't have any money down on the loans, right?
That's the point.
Yeah. So if they had, they lived there for 2 years, they were paying $1,500. They're like, well, hell, this is basically just my rent payment. If I just walk away from this, I don't have to deal with it. Now, banks are making people put down significant amounts of money because you have to remember now, the average home is like what, $450,000. A bank's going to make you probably put down a minimum 5%. So what is that? $20,000. So you're not walking away and being like, I think I could rent for cheaper than my mortgage. You're now also saying, God, I put down $20,000 minimum, probably more. And now, I'm going to walk away from the mortgage and lose my money. And I've been paying, and I have this low rate, right? And so it's different. It's not the same.
Yeah, it's a good point. We call it skin in the game. Like there wasn't any skin in the game back there in 2008. Like people could fog a mirror, get a house. Also, you want to compare, use this. Foreclosures and our delinquencies were 9%. Today, they're less than 1%. Okay, that's a fact, right?
Yeah.
Like it's a fact. And to your point, back then, they didn't really need a down payment, if any. And now they do. So, so that's a fact. So we're close. So there's no crash. There's no, this is just a market shift. And it's going to be very interesting to see where this goes. But let's talk about interest rates.
Well, before we get to that, I just thought of this. I never really thought of it because in 2008, I was young and I was like 23 and I did not own a home anyway, so it didn't really impact me. But I bet a lot of people in 2008 could have made their housing payment work. They just didn't want to because they're putting money into something that's worth less than they bought than it's worth.
That's a good point.
So they didn't some of those people did not have to walk away. They just chose to because it just seemed like the smart financial thing to do. You know what I mean?
That's a good point. If you have a mortgage for $200,000 and the home price is 150 or
And you didn't put any money down.
and you didn't put any money down, you're like, screw it, I'm just going to go rent.
Right.
Because, you're negative, right?
And it knocks my credit for a few years, and then I can do what I want again, right?
Yeah.
So it's not a big deal.
Whereas they're a little bit different now where they have a lot of equity and they have a down payment.
Yeah, and most of the time, their rent price, if they have a low interest rate, is probably it's probably more than their mortgage.
Right.
So just really, there's a lot of fundamentals. You guys can't just say, okay, I'm watching YouTube and everyone says there's going to be a crash. Like, you have to really think, like, if you were a seller, why, other than not being able to afford your payment, would you walk away from this house? And how many people cannot afford their payment right now?
Yeah. So what you should do, if you're watching some video that's like, trying to freak you out about a crash, just look at a couple of things. A lot of times they use percentages, right? The percentage of drop, right? So that's one thing. But you really need to take a look at days on market. Is it a balanced market? And there are definitely markets that are turning into buyers markets. The various areas in Florida, for sure. Some areas in Phoenix, for sure. Some areas in Dallas, for sure. You start Austin, for sure. Right? There are markets that are leading with a lot of inventory, and there are others that don't have much. And so, but that's normal, right? It all rolls up to this 4.8 months of supply for existing inventory.
And it's interesting, too, you said people like to get you with percentages. Yeah, because somebody could tell you the amount of foreclosures has went up 250%, since 2020. Well, if it's like 0.2, going up to 250% is only making it, 0.8. So it's just like, you really have to dig into that, based on what, right?
Yeah. It's interesting when they say, a lot of times, for Texas, for example, we'll just use Texas. Texas has over 30 million people living there, right? And then they had 526,000 people move in the last 12 months or something like that. Now, that's significant. But when you take a look at that as a percentage of 30 million, it's a lot less, right? So as you start to take a look at these percentages, you can do the same thing on the way down, right? As people move out, you got to look at it as a percentage of the total. And the same thing with the house prices. As house prices go up or down, to your point, if a home price is $300,000 and it goes down $10,000, it seems like a lot. Right. But it's not. You
right.
know what I mean?
It's a very small percentage, really. Yeah.
Right. Yeah. So, you got to dig in a little bit deeper and before you start to freak out about some of this stuff. But, but it's good. I have no problem with watching some of these guys. They're just trying to get clicks. But it is interesting the way they spin something.
Yeah, totally.
That's I laugh at that, but whatever.
Let's chat about rates, because you're going to go into
interest
that.
rates. Yeah. So, okay. So here's my prediction. I do not believe that we're going to see anything until this time next year. Like we're going to see a little bit, maybe a quarter here, quarter there. I think right now the Fed believes, if you look at all the tea leaves, right? Unemployment, inflation, all the stuff, right now they're saying there's no reason to panic. There's no reason if Trump wants lower rates, that's who he is. That's going to create a bubble. Period. Right. So maybe, although I don't think Powell and him are speaking terms at the moment, but maybe we'll do a quarter here, quarter there. Who knows? But it's not going to really move the needle that much.
Yeah, him and Powell, it's like a male ego thing. Like even if Powell knows he should lower the rates, he's not going to want to, because then he's letting Trump win, and Trump's going to keep pushing on him. So until we get a new
I have a theory.
Chairman in there.
I have a theory on this. I haven't told about this publicly.
Go ahead. Reveal it.
Here's what it is. I think that Trump wants to mask the tariff inflation that's coming by pinning it on the Fed. In other words, if the Fed lowers rates, you know what I mean? Because he can say, they created inflation with lower rates. And right now, the Fed's going to kind of sitting back, waiting for these tariffs to hit, and hopefully they don't. I'm speaking this. I really hope that the consumer does not see tariff inflation like everybody thinks. But somebody's got to pay for this, period. And so that you can't debate that. And so the question is I think Trump can, if he can get the Fed to back down a little bit on these rates, then he can say, "Oh, it's not me. The Fed lowered rates." So anyway, I think that's the struggle that's going on. But I could be wrong. Just a conspiracy theory that I have.
Well, I have one for you.
Oh, what is it?
I think that the Fed doesn't want to lower rates because they don't want to lower their rates and then rates go up because it's really based more on the bond market than the Fed itself.
Ooh, also good one.
We'll
see. Married here. That's pretty good.
We will see.
I don't know. But either way, Powell is out of there in May. He's going to have a successor that Trump's appointing. But that is a ways out. Yeah, that's a year from now. Yeah. And by the time they're in there in May, I mean, we're talking about this time next year.
Yeah, a lot can happen in a year with housing prices.
Yep.
I mean, definitely, I still think it's a good time to buy and get a deal. But sure, if you wait longer, you might be able to get a better deal, but you might miss your window. You don't know. You can't predict it.
We'll see. Okay, so right now, before we wrap up, what should buyers be looking at right now? What can they do right now?
Well, for one, they should be negotiating very aggressively, very aggressively. I mean, I would write offers for, 20% off the purchase price, especially if a home's been sitting over 30 days.
Oh, let me tell you a quick story, because, by the way,
yeah,
it has to do with this. Jason Hartman came to Phoenix about 6 months ago, and he looked at a house, and he wanted to buy it. And he said, I was going to write an offer for 25% less. And he goes, I passed. And he goes, darn it, if that home didn't sell for almost exactly that.
Yeah.
So to your point,
yeah,
don't be afraid to write a low offer, because he said, he goes, it was the perfect house for me. And that was his number.
But here's the thing, though. If you write it for 20, don't expect it to just be accepted either.
Yeah.
It's going to be negotiated and everything else. But you should be getting a deal right now, especially if it's listed over 30 days. If it's under 30 days, I mean, homes are still selling in 5-6 days, some homes, right? So people aren't going to immediately take this lowball offer from you, right? So
right.
I would wait to see if it's listed for 30 days. If it's vacant, even a better shot, because now they have, 2 mortgages going most likely. That's the biggest thing. And then also, if you want to get a new build, I think you can negotiate with builders. Now, here's the thing with builders, it's not like you're going to get this deal someone else isn't going to get. Builders decide what they're going to do. Yeah.
8.1 months of supply is a lot. Let's put it this way, guys. If a builder built a home, it's pure expense on their balance sheet. Pure. Right. If they have a neighborhood of 10, 12, 30, 40 homes, you might be able to get a smoking deal right now.
You might. But also, would you say with 8.1% with builders, if you want to buy a new build, you should kind of wait on the sidelines a little bit and see what happens?
8.1 months, you mean?
Yeah, sorry, yeah.
Yeah, okay. Maybe. I don't know. It depends. But if there's, I don't know. I think there's a lot of people that like to buy new, right?
Sure.
And the time to buy new is when a builder has lots of supply.
But I'd say if you're looking for a new development, make sure the area is not necessarily an up-and-coming area, and it's actually an area you want to be in. Because some of that can bust. I know back in 2008, Maricopa, different cities in Phoenix, they busted because it was a bunch of new builds, and then you had a bunch of,
And they get you on the upgrades. Be careful.
Yeah. So
try to find one where they've already put out, buy a model home. By the way, I used to do that. I used to buy model homes and run them back to the builders because it would come off of their balance sheet and they were fully decked out. And then after they were done selling everything out of the subdivision, I would just keep it. But be careful of that. But also pay attention to these rate buy downs. These builders will buy down rate. You can say, for example, I can only afford $3,000 a month. They can get there, potentially.
We're seeing that just on the existing homes too. Like you're having sellers buy down your rate. And a lot of times it's actually better to pay for them to buy down your rate than it is for you just to ask for a discount off the home.
That way your home sells and, for the price that you want it for. But you're actually, to Danielle's point earlier, the concession makes it in there somewhere. And this is precisely why Lennar had that big hit in their earnings this week. That just came out. But also, I think you're going to be seeing future price cuts. I think we're going to see future inventory. Don't you agree?
Yeah. And I think right now, if you're a buyer, you're buying for long-term value, right? You're never supposed to try to time the market because you're going to miss the top as a seller. You're going to miss the bottom as a buyer. So what you want to do is you want to focus on that long-term value. And that's why I said to be careful of these new built neighborhoods in random places in the middle of nowhere where just a couple years ago was kind of a hot thing to buy, because what's going to happen, like we saw in Maricopa in 2008, you have much more significant price declines in those kind of areas than you do in more of your mainstay, nicer, more developed, areas. So I would be careful buying new builds that are, far outside the city limits in a quote unquote up and coming area. I would prefer to focus on, long-standing areas that have done well.
Good point. And then be careful because, what could prices drop further? What could happen for prices to drop further? We should discuss that.
Yeah, I think prices could drop further, if unemployment rises, like we mentioned before.
Clearly,
that's a big one.
More people out of work.
But without government help, I think that's important because, I believe if we were to see some kind of mass unemployment situation, they would send stimulus money, and stimulus money allows people to keep their houses.
Yeah, that's true. Or first-time home buyer cash. I know there's been some discussion around that. That'll be very, very interesting. But I think also higher inflation, right? Like if the consumer spending kind of backs down, the confidence right now, especially, hopefully we don't end up in some kind of war. Those kinds of things can be disruptive, clearly. Anything that has uncertainty around it, people kind of pull back.
Mm-hmm.
Right.
Yeah. Also the rise in foreclosures. I mean, that's obviously, like we said before, don't pay attention to foreclosures are up 100%. Pay attention to the actual number. 2008 was around 9%. So look for that foreclosure number to, continue to rise.
Yeah. And then if interest rates do go up, this going to be tougher for lenders. They're going to be lending less because that's how that works, right? If rates go up, then you get less mortgage because your mortgage payment, all things being equal, is they're going to try to solve to the mortgage payment. So higher rate means lower loan. And so be watching for that. So those are some indicators that I think you can watch.
But before you jump off of that, I think it's important for people to understand that is, right now as a buyer, if you can get a loan and you qualify for a loan, that's awesome. If we do have bigger price corrections, that means banks are losing money. And if banks are losing money, like if things were start to foreclose and things, which we're not anticipating, but if they do, then banks tighten who can get a loan and how much you have to put down. So sometimes I think on a buyer side, they're like, oh, I just, if I was in 2008, I would have just bought, in 2010. It was extremely hard to get a loan in 2010. So it's not just like anytime you want, you're going to have the same criteria for the buy, right? Like banks are going to, because if prices have just went down or they're going down and a bank was only having you put down 5%, they very easily can get underwater on a loan where you only put down 5%. So if they have you put 20% or 25% down, plus really make sure you're a strong candidate, like they'll tighten their lending criteria, they might do that because that gives them wiggle room that if prices go down more, they're not underwater on that loan. So don't always think that your situation, you're going to get the same, rate, you're going to get the same loan amount, you're going to be qualified for all the same things. Because if we really do have significant price decreases that some of you think will happen, then you're going to see a much tighter lending environment.
Yeah, that's a really good point. Because think about you guys. Like, what if you lent somebody some money and then the price of whatever you lent it for them went down? Like, the risk of you getting paid back goes up.
Yeah.
So that's how a bank thinks. So you got to think that way. That's why 5% down is also 95% loan, right?
Yeah.
So if the home price goes down by 5%, that means that the house is worth the loan. So so if you put on the lender's hat, you start to think about that. Now, it's not all bad because it doesn't necessarily mean the person is going to default. And just because a lot of people in 2008 held on, even though their loan was more than the house was worth, a lot of people. So doesn't mean that you have to, right?
Yeah, and I also want to bring this up too, is, people that think there's going to be high unemployment, because a lot of people listening also believe the unemployment's going to go really high. Well, guess what? If you lose your job, you can't get a loan.
It doesn't
Even
matter,
if you could just get a new job. Oh, I lost my job, and then 2 months later, I got another job. The bank doesn't care. They want you to have that job for X amount of time to make sure, especially in an
we want 12 months of W-2 statements, right?
And they might even increase that if it's a high unemployment time. They might say, actually, we're looking for people that have had their job for 2 years. So you have to think of that too. It's like you have to play devil's advocate. For those that think prices are going to go way down, employment's going to go way up, you have to understand what that environment looks like, because it doesn't look like this environment on the lending standpoint.
Just look at it from a lender's perspective. But I think in conclusion, this is not 2008, but it's not 2021 either.
Yeah, absolutely. Buyers have more power right now, but it also doesn't mean a crash is coming. So don't jump into all the hype. Just really understand your market. And there could be some markets that have much more significant corrections than other markets.
If you're a buyer, this is a great time for you because you have a lot more options. You can buy where you want. You can buy the house you want. You don't have to worry about this seller frenzy stuff that we just came out of. The only issue is the rate, right?
Yeah.
But if you can find the house, like it was exactly what Danille and I did.
Yep.
We found the house we wanted. And am I happy with the rate? Not necessarily, but it's the house I wanted. I'm overpaying each month right now. For now, if rates go down, I'll fix that, right?
Yeah, absolutely.
That's the way it is.
All right. Well, have a good one, guys. See you next week.
Cheers, guys. Hey, guys, if you found this content valuable, be sure to check out this next video. It dives even deeper on what investors need to know right now.